Think Florida's housing market is unstoppable? Think again. Behind the palm trees and sunshine, warning signs are flashing everywhere in 2025. Prices are sliding, insurance premiums are spiraling out of control, and homes that once sold in a weekend are now gathering dust for months. From Miami's neighbors to smaller inland towns, some of Florida's hottest markets are suddenly cooling fast. Could your city be next? In this video, we're counting down the 10 Florida cities facing the harshest housing corrections in 2025. Stick with us until the end, because the number one spot might surprise you. And before we dive in, make sure to like, subscribe, and turn on the bell so you don't miss future breakdowns right here. Number 10, Fort Lauderdale. Fort Lauderdale has long been a magnet for investors, retirees, and vacation rental owners. But in 2025, the shine is wearing off quickly. Inventory is up nearly 80% compared to last year, and homes that were fetching top dollar just 2 years ago are now languishing on the market. Coastal homeowners are especially feeling the pinch. Annual insurance premiums have crossed the $7,000 mark on average. Combine that with ballooning HOA fees, and you've got affordability collapsing. Investors are pulling out, Airbnb occupancy is down, and properties are being listed at losses just to escape. Fort Lauderdale may still look glamorous on the surface, but under the surface, the cracks are widening. Number 9, Cape Coral. Known for its vast network of canals, Cape Coral saw a massive construction boom during the pandemic. But by 2025, the city is paying the price for that overbuilding. Inventory has doubled since 2021, and home prices are slipping by 5 to 7% annually. Flood insurance costs are hitting some owners with $8,000 to $12,000 bills, while new buyers face hefty utility connection fees that can exceed $30,000. Mortgage rates near 7% have pushed many locals out of the market, leaving entire neighborhoods stuck with unsold homes. Cape Coral still has postcard views, but its housing market looks more like a storm on the horizon than smooth sailing. Number 8, Ocala. Ocala, the horse capital of the world, was once praised for affordability and quiet charm. But developers went all in, and now the area is oversaturated. Listings have skyrocketed nearly 275% in 2 years, with prices sliding from $310,000 to $275,000 and still struggling to attract buyers. Silver Spring Shores and other developments resemble ghost neighborhoods, with unsold homes lining the streets. Wages in the area haven't kept up with soaring housing costs, and jobs in agriculture and manufacturing are slowing. Insurance only adds to the pain, leaving many families priced out. What was once Florida's affordable hidden gem is now a cautionary tale of overbuilding. Number 7, Tampa. Tampa was a real estate darling just a few years ago, but in 2025, it's facing a sobering correction. Active listings have surged by 80%, while buyers are being squeezed by higher mortgage rates, property taxes, and climbing insurance premiums. Homes now sit on the market for over a month, compared to barely a week during the peak. Investors who once flooded the area are now cutting losses and unloading properties at discounts. Even luxury waterfront buyers are rethinking deals as hurricane risk drives insurance premiums above $5,000 annually. The Tampa housing party may be over, and reality is setting in fast. Number 6, Jacksonville. Jacksonville, Florida's largest city by land area, is also showing one of the state's biggest cracks in 2025. Inventory has jumped from around 2,200 homes to nearly 4,000 in just 2 years. Builders overestimated demand in suburbs like Middleburg and Orange Park, but mortgage rates hovering near 7% have scared off many would-be buyers. Fitch Ratings estimates the city is overvalued by more than 25%, and with shipping and logistics jobs slowing, the local economy can't keep pace with inflated housing costs. Add in soaring flood insurance and investor panic selling, and Jacksonville's market is now in clear retreat. Number 5, Sarasota. Sarasota's luxury market is cooling faster than expected. Inventory has more than doubled since 2022, and homes once selling for $1.2 million are now listed under $1 million, often with no takers. Insurance premiums of $8,000 to $10,000 a year are scaring away waterfront buyers, while retirees and out-of-state investors, the city's backbone, are holding back due to stock market volatility and high borrowing costs. Homes are sitting on the market for 3 months or more, despite incentives and flashy open houses. Sarasota remains beautiful, but its real estate market has shifted firmly into buyer's territory. Number 4. Port St. Lucie. Port St. Lucie has been one of Florida's fastest-growing cities, but in 2025, it's become one of the most overpriced. Homes are valued more than 40% above historical trends, while local incomes haven't budged enough to support those prices. Inventory is swelling, schools and roads are stretched, and new residents are feeling the strain. Insurance costs averaging $6,500 annually are pushing buyers out of deals. Sellers are slashing prices and offering big incentives just to move properties. For many residents, the dream of Port St. Lucie is fading into frustration as affordability collapses. Number 3. Fort Myers. Fort Myers was a pandemic-era boomtown, with prices jumping 65% between 2020 and 2022. But by 2025, the correction is in full swing. Inventory has surged past 5,000 listings, price reductions are common, and homes now take more than 2 months to sell. The aftermath of Hurricane Ian has left insurance premiums sky-high, averaging up to $11,000 per year, even outside flood zones. With tourism down and Airbnb revenue sliding, many short-term rental investors are dumping properties. Locals earning under $60,000 a year can't keep up with housing costs, leaving the market overextended and vulnerable. Number 2. St. Petersburg. St. Petersburg's cultural energy and waterfront charm couldn't shield it from the 2025 housing slowdown. Listings have ballooned to over 5,600, and prices have already slipped from $450,000 to around $390,000. Airbnb saturation has left many investors stuck with homes that no longer generate steady income. Flood insurance premiums have soared 60 to 70%, making ownership untenable even for higher-income buyers. Locals with household incomes under $60,000 are priced out, while nearby cities like Clearwater are drawing attention instead. St. Petersburg remains lively and scenic, but its housing market is feeling real stress. Number 1. Lakeland. Lakeland, once touted as Florida's next rising star thanks to its location between Tampa and Orlando, is now leading the state in vulnerability. Inventory is up 60% since 2023, and prices are falling month after month. Overbuilding in the suburbs has collided with fading demand, leaving many new developments struggling to sell. Investor-owned homes make up nearly a third of all listings, and panic selling is accelerating. Insurance premiums averaging $4,000 to $5,500 annually are another burden buyers aren't willing to shoulder. With logistics and warehousing jobs slowing, Lakeland has gone from opportunity hotspot to housing crash poster child. From Sarasota's luxury retreats to Lakeland's suburban sprawl, Florida's housing market in 2025 is entering a turbulent phase. Rising inventory, unaffordable insurance, and stagnating wages are combining to put serious pressure on buyers and sellers alike. No market is immune, not even in the Sunshine State. Did your city make the list? Have you seen price drops or stalled listings in your neighborhood? Share your experience in the comments below. What's happening in Florida today could be a preview of what's coming nationwide tomorrow. Stay tuned.